Hey traders, Raghee here, and this is a follow-up to the alert that I sent out about 9:50 Eastern this morning, and I want to really be clear about a few things about these shorter term time frames. Number one, shorter term to me is usually 60 minutes or less. Okay, so if we're looking at a 60, 30, 15, 5, 3, 1 minute time frame, these are sort of day trading shorter term. Okay, second, in terms of the trend, and let's actually take a look at each. What we saw this morning was the 15-minute, and we talked about this in the morning chat, the 15-minute started to take on more of a uptrend. How do we know this? The green grab candles and the upward slope of the 34 EMA wave. And the two markets that I'm most interested to the long side have been the two markets that on their respective daily time frames are bouncing off of an oversold floor. That's again most definitely the Dow and the S&P. You could make an argument for the NASDAQ as well. Now I know the Russell's been on fire, that's fine, but I'm still going to basically respect the fact that the markets that are most likely to bounce and move higher are the two that are in distribution. That means that, yes, I'm not always going to pick the fastest horse. I just want to pick a winning horse. So that's a concept I want you to think about. 4 horses are running: Russell, Nas, S&P, Dow. Don't demand that not only do you pick a winning trade, but you pick the best winning trade, right? I just need a horse that's going to win. I don't need the fastest horse. And maybe all 4 in this case, right? I know the analogies may be a little off, but all 4 could potentially win. Don't expect to find the one that's going to be the biggest winner. All right? That makes a tough job even tougher. So 15-minute, we sent out the S&P, Dow, and NASDAQ levels. Now, because it's a 15-minute time frame, what I'm doing is I'm doing a combination of two things. One, I'm making sure we keep plotting green grab candle after green grab candle with only the occasional, if any, blue. That's pretty important. Blue injects a certain amount of neutral. It means we're losing some of that bullish momentum. The other thing that I'm doing is I'm looking at the value of the 3 lines of the wave, and then I'm looking at the value of the expected price movement range for the symbol. In other words, the EPMR is going to update every 15 minutes, top of the hour, quarter past, half past, quarter till, and I'll continue to update this. The expected price movement range is a wonderful combination of the historical price movement rhythms that we see in any market with a current look at volatility. So if you want to mix a little bit of volatility and a little mix of the current price movement range, you combine it, and that's what you get with the expected price movement range. So it's a really good sensitive look, and it's ideal for day trading. So what am I doing? I'm identifying the lower end of the range. So time after time after time, I'm looking at, okay, where are the 15, 30, 1 hour and 4 hour lows, and do these sync up with this? I'm just kind of mocking what the wave would look like. Are they in the zone of what the 3 lines of the moving average would be? You know, am I seeing these levels in play? Whichever ones are, you know, whichever ones may be, those are the ones that are going to help me identify the floor, the support that I want to buy into on a pullback. So, for example, let's take the Dow. All right, 72, 45, 12. 72, 45, and 12. Go back to the auto chartist, and we're going to refresh the price movement. Actually, let's refresh the price movement range for the Dow. And you're going to have to do this manually from time to time. Not a big deal. Let's look that up. I'll just refresh my browser window, by the way. So I refresh that. Take a look. So I know that my lines on the 15-minute, right, this is 87, 73, and 52. 87, 73, 52. So let's go back on over here. Do 87, 73, and 52 actually work? 87, no. 73, yes. 52, yes. Right? What about the next one out? And 91. No, too low. Too low. So what works? 52 and 73. What's going to be my zone for entry? Basically 52 to 73. And then I'll update that again. Always checking and rechecking that we're consistently printing green grab candles, and then whether or not those price movement ranges fall within this zone of the wave. Now, it's 11:22 a.m. Eastern. In 8 minutes, this is done. Between 11:30 and 1:30, I really don't want to engage intraday time frames. This is known as the doldrums, and I don't want to overtrade in these 2 hours. So from, say, 2 in the morning Eastern to 11:30 Eastern, no problem. After the bell rings to 11:30, really no problem. But after 11:30 and until 1:30, where we look for that 1:30 bid, I want to stay on the sidelines, okay? That's the trade. That's exactly what I've been doing all morning long. That's how you do it, and I'll see you in the next update.